Hi, I'm Devin Shute. Welcome to the TRG Money Minute, coming to you from lockdown. So the JSE had a fantastic week again last week. It rallied about 7.6% in the 4 days, and this was on top of a rally of about 4% the week prior to that. So this means that although for the year our market is still down about 15%, we're well off the lows of around 33% lower that we were only 3 weeks ago. In addition, the rand, after crashing to 19.34 to the US dollar, also staged a nice comeback and has rallied about 10%. However, I must caution investors that you must expect the volatility to remain for some time to come. We're closely watching the US earnings season, which starts today, and this will give investors a very key insight as to the impact on profits from the pandemic that we've experienced. And in news we all know, President Ramaphosa announced an extension of the lockdown on Thursday for a further 2 weeks. This will have the dire economic impact. It will hamper growth as well as drive up unemployment. However, in a welcome gesture, the entire executive as well as him will be taking a third of their paycheck as a reduction, donating it to the Solidarity Fund for the next 3 months. The National Command Council is also meeting today, and they're going to determine a strategy for how we are going to economically get out of this post-lockdown. They're talking about a phased approach, so certain industries coming online ahead of others, and the alcohol and tobacco industry are lobbying hard to be first in the queue there. And another example that we could do is the repurposing of industries that have been impacted by the coronavirus. So take, for example, the car manufacturing industry could look to start manufacturing ventilators in the short term. OPEC agreed to cut oil production last week. This was also widely expected by about 10 million barrels a day. This drove up the oil price a little bit, but we're still sitting at those very historically low levels, around $32 a barrel. And this is good news for South Africa because we import a lot of our fuel. And lastly, in breaking news this morning, the Reserve Bank moved their Monetary Policy Committee meeting earlier to today and announced a huge 1 percentage point interest rate cut, topped on the one that we had previously. This has brought our interest rates to historically low levels and will hopefully get some of the economic growth and money flowing that we so desperately need. In bad news, they did see that our economy will contract 6.1% this year, but will start to grow next year by about 2.1% and the year after that by about 2.7%. They said there is space for further interest rate cuts should they be required. Thanks for watching. Have a good week.